I'm Stefan, a CPA here in Canada. This video isn't personalized financial advice, but it does explain the RRSP deadline for 2026, how RRSPs actually work, and the most common mistakes I see that Canadians make each year around the deadline. All right, so we're going to get started right away with the actual deadline for filing your RRSP for the 2025 year end. So, again, just a reminder, we are doing the filing for the 2025 year end for the T1. And as you can see here, the deadline is April 30th, 2026. So we'll be filing in April 30th, 2026 for your 2025 year end. So what's very important to note is your RRSP contribution. Of course, you can contribute in 2025 and have it count towards your 2025 year end. So that would be from, let's say if you filed in December 2025, right, then that would count. But since it's the new year and it's 2026, we have to look at when we're allowed to contribute in 2026 for it to be allowed to be considered in the 2025 deadline. And here, if you're looking at the website, you can see the filing dates for 2025. This is the CRA Government of Canada website. It tells you that March 2nd, 2026 is the deadline to contribute to your RRSP. So what does that mean? That means if you were to contribute from anywhere from January to March 2nd, 2026, it will count towards your 2025 year end, which is really good because you get that deduction. Okay. That deduction is a very important one, as I spoke about in a previous video, but not to get into it too much, but we do know that the RRSP deadline is a serious thing we need to consider because it'll bring our tax bill down, which is essentially what we all want. We want to pay less taxes in a way that is allowed, right? So where do Canadians make the most mistakes? So one of the biggest mistakes I see is that people tend to just contribute to their RRSP without thinking about whether it is a good decision or not from a tax-based standpoint. So you never want to just contribute to your RRSP each year without thinking about, your planning for the future, your tax planning for the future. In theory, the RRSP is built for your retirement, and that is why the Government of Canada actually gives you the incentive to contribute to it. And they give you the incentive by allowing you to take a tax deduction and to pay less tax in the year you contribute. But we have to consider whether it is good now or in the future. So if you're a student, for example, or you just started working, or perhaps you work part-time, or you just started in the field, it would not be a good idea for you to contribute to your RRSP right now because you'll most likely be a low earner. You'll be in one of the, if not the first bracket, let's say, and it just wouldn't be worth it for you at that point to contribute to your RRSP. Because what we want right now is, in theory, if we're saving on tax now, that means that we should in theory have a tax rate that is very high, right? We're getting taxed at a very large percentage. Why? Well, the RRSP, when you withdraw it in the future when you're retired, will not be tax free. You'll have to pay tax on that, but you'll likely be a lower income earner when you're retired, right? You won't be working. So then you save on that difference, okay? So remember, if you're a student or low earner, maybe don't contribute now. Perhaps save that contribution room for the future when you become a high income earner, and that contribution will always stay there. You won't end up losing it. Okay, you won't actually end up losing it. And yeah, just don't think that that what you're doing now, you feel like you must contribute to your RRSP, or you want to actually think about it, whether it makes sense from a tax point, right? So if you're a low income earner, maybe it would make more sense for you to actually contribute to your TFSA, right? And that's exactly what I was explaining in a previous video. All right, so what's really important here, though, is if you do end up contributing to your RRSP, we want to make sure we're contributing the correct amount. So how do you know what your contribution limit actually is? Very important. The government of Canada, the CRA, they track it for you. So in your notice of assessment, when you receive your notice of assessment, you can end up looking and you can see what your RRSP contribution limit is. You can also see it if you log into your CRA account online or if you give them a call. And what's really important is that you don't over contribute. Okay, so if you have excess over contribution, okay, plus 2,000, so you get a $2,000 life buffer here. So if you over contribute, but it's less than $2,000, then it's fine. You won't be penalized. But if you actually do over contribute more than that 2,000 lifetime amount, you get your penalty is 1% each month on the amount you over contributed. So let's think of it like this. Let's say you had $10,000 of over contribution, $10,000 of over contribution, and you had the lifetime amount of 2,000. You never over contributed before. So really your contribution is 8,000, and then you'll be paying 1% on that 8,000 per month. Okay, so these are pretty big penalties, and things get a little bit tricky when you do over contribute. You have to file another form here, and you'll have to pay the penalty. So best to not over contribute. Okay, just take a look, see what your contribution limit is, stick to the contribution limit, and make sure you file at the correct date. Okay, so these are all very, very important. That's something I see that Canadians they end up learning about the hard way when they over contribute more than 2,000, and now you have to pay these penalties, and it just becomes super tedious dealing with that. So, you don't want to make those sort of errors. You do want to feel informed about whether you should do an RRSP contribution or a TFSA contribution. So remember though, this video is just the most common RRSP situations. It doesn't apply to any cross-border corporate reorgs, anything like that where additional tax planning must be done. But overall, for all of you individuals and wanting to learn more about tax and planning and whether you're making the right decision or not and how it works, then this will be more applicable for you. If you want clear, practical Canadian tax guidance explained by a CPA, subscribe to the channel. As the channel continues to grow, I'll add in more helpful tools and resources in the description.